Hey everyone, welcome back to Corporate Decoder, the place where we try to find out if a company is hiding something in their quarterly report and whether it means a big payday or a big disaster. Quarter ended the 30th of September 2025. This is Amerant Bancorp Inc., a bank holding company now. They just released their latest quarterly update and we are going to dive in and see what the numbers are telling us. Stick around because this one has some interesting swings. Also, if you like getting the real story behind these filings without all the corporate jargon, make sure you hit that subscribe button and the notification bell. And hey, we've got a growing community on Discord, linked in the description, where we break down these filings even further. You do not want to miss that. Let's kick things off with the balance sheet. As of the 30th of September 2025, Amerant Bancorp Inc. had total assets of about $10.4 billion. That is up from just under $9.9 billion at the end of 2024. So they are definitely growing their asset base. Now, where is that growth coming from? Well, their securities portfolio, which includes things like government bonds and mortgage-backed securities, shot up by over $800 million. That is a huge jump. On the flip side, loans held for investment, which are essentially the core of a bank's business, actually dropped by about $330 million. This is a really interesting divergence. They are holding more investments and fewer loans as of this report. Moving over to the income statement, things get even more interesting. For the 3 months ending the 30th of September 2025, they reported a net income of about $14.8 million. That is a massive improvement from a net loss of nearly $48.2 million in the same period last year. This is a huge turnaround. The biggest driver here seems to be non-interest income. In the third quarter of 2024, they had a massive loss of almost $48 million in non-interest income, much of it due to losses on securities during a portfolio repositioning. In contrast, this quarter, they are reporting $17.3 million in non-interest income, significantly boosted by higher securities gains, which is a big swing from last year's losses. For the 9 months ending the 30th of September 2025, the net income was close to $50 million. Compare that to a net loss of $32.6 million for the same 9 months in 2024. Again, a very strong recovery. This recovery is largely thanks to that non-interest income turning around. It went from a loss of about $13.8 million in the first 9 months of 2024 to a gain of $56.6 million this year. A big part of that turnaround comes from securities gains. Last year, they took a hit of $68.7 million because they were repositioning their investment portfolio. This year, that is flipped to a gain. So what about the core banking operation, the interest they make from loans minus the interest they pay on deposits? Net interest income for the third quarter of 2025 was $94.2 million, up 16.2% from last year. That is good news. It means they are making more on their assets even with lower loan volumes. The story is similar for the 9-month period, where net interest income grew by 13.5% to $270.5 million. This improvement is partly due to shifting more money into higher yielding debt securities. Now, let's talk about the allowance for credit losses. This is the money bank set aside to cover potential loan defaults. In the third quarter of 2025, they provisioned $14.6 million for credit losses, which is actually down from $19 million last year. And for the 9 months, it is also down significantly. This suggests they are seeing fewer potential defaults or are more confident in their loan portfolio's quality. Looking at the average balance sheet details, we can see that their loan portfolio net of losses averaged just under $6.9 billion for the quarter. That is down from over $7.2 billion last year. But look at their debt securities available for sale. That average balance jumped by over $660 million. They are definitely shifting their focus from making loans to holding more securities, and their cost of total deposits, that is the rate they pay on deposits, has dropped significantly. For the quarter, it was 2.41%, down from almost 3% a year ago. This helps boost their net interest margin. Speaking of net interest margin, or NIM, it increased to 3.92% in the third quarter of 2025, up from 3.49% a year ago. And for the 9-month period, it also improved to 3.83% from 3.52%. A higher NIM generally means the bank is more profitable from its core lending and borrowing activities. Their allowance for credit losses, the money set aside for bad loans, also increased. It stands at $94.9 million as of the 30th of September 2025, up from $85 million at the end of 2024. This might seem counterintuitive given the lower provision expense, but it could mean they are being more conservative and want a bigger cushion. Now let's check on asset quality. Total non-performing assets, which are loans that have gone bad or properties the bank has taken back, were $139.9 million. That is up from $122.2 million at the end of 2024. 2024. This is definitely something to watch. While their overall net income has improved, they are seeing an increase in these problem assets. About $124 million of that is in non-performing loans, and the rest is in other real estate owned. Looking at their loan quality indicators, the amount of loans rated substandard has increased. For example, in commercial real estate, the substandard category grew significantly. Specifically, owner-occupied commercial real estate loans in the substandard category jumped from $21.4 million at the end of 2024 to over $42 million by the 30th of September 2025. This aligns with the overall increase in non-performing assets. Let's look at their investment side again. Total securities have grown substantially to $2.3 billion. A big chunk of that is in debt securities available for sale, like government agency mortgage-backed securities. They also have a new category this year, trading securities, totaling almost $120 million. This indicates a shift in strategy towards more active trading of securities. On the debt side, they redeemed $60 million of their senior notes in April 2025. This likely reduces their interest expense over time. Their total liabilities have grown largely due to a significant increase in deposits, particularly non-interest-bearing demand accounts and savings and money market accounts. Total stockholders' equity is up to $944.9 million, an increase from $890.5 million at the end of 2024. This is thanks to the net income they've earned and a reduction in their accumulated other comprehensive loss, which is mostly due to changes in the market value of their investments. Their capital ratios look strong. Both the company and the bank are well above the minimum requirements to be considered well capitalized by regulators. This suggests they have a solid buffer. So what is the big picture here? Amerant Bancorp has clearly turned a corner financially. The massive losses seen last year, largely due to repositioning their investment portfolio and market conditions, have been replaced by solid profits. Their core lending business is stable, and they're benefiting from lower interest expenses. However, that increase in non-performing assets and the growth in substandard commercial real estate loans are definitely red flags. They seem to be pushing growth through investments rather than loans, which can be a less risky strategy for banks, but it also means they are not generating as much interest income from core lending activities. The company is also actively buying back its own stock, returning capital to shareholders. The biggest risk I see is that growing pile of non-performing assets and the increasing amount of substandard commercial real estate loans. If those continue to rise, it could put pressure on their profits and their allowance for credit losses. On the opportunity side, their strong deposit growth and reduced cost of funds are excellent. They've managed to bring down their interest expenses effectively. Overall, Amerant Bancorp is on an upswing compared to last year, especially in profitability. But keep an eye on asset quality, particularly in commercial real estate. That is the main storyline to follow. Alright, that is our breakdown of Amerant Bancorp Inc. Its latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.